Look around you, different things born out of truth and passion. Business software, it's our craft, our identity. Thoughtfully engineered, passionately designed to help you transform your business. Zoho, made in India, made for the world.
Of India keeping the gunpowder dry. This time they have maintained the repo rates at the level and waiting for more clarity in the months to come. As far as core inflation is concerned, the commentary seems that it has been contained. But which are the risks? The weak demand has been highlighted by Reserve Bank of India Governor. Also, maintaining that monsoon, lower inflation as well as the GST rate rationalization will impact the growth. But overall, GDP guidance has now been increased to 6.8% for the current year. However, he is maintaining it is below aspirations. To discuss what are the actually implications of this policy, we have with us Dinesh Khara. Mr. Khara, welcome. My first question to you will be announcements which has been made outside the policy as well, and especially ECL framework is back.
Yeah, I think ECL framework, they have given the timelines now. It will be effective from 1st of April 27. So I would say that when it comes to ECL framework, actually banks are now very well capitalized, one, and secondly, they have got enough, when it comes to the coverage ratio, that is very healthy. So I think with that kind of with those kind of parameters, it would be very easy to adopt the Basel III norms now. But and still, I would say that the timeline given from April 27 is quite a relaxed timelines, and it will actually give adequate time for all the banks to prepare themselves for implementation of the ECL guidelines.
Right, as far as transmission is concerned, Reserve Bank of India Governor did give details of 58 basis point transmission as far as the new loans are concerned, and out of that 21 bits has already been done. As far as deposit rates are concerned, that has also happened 106 basis point. Do you think there is a scope between now and the next 2 months policy which is going to come in December, there will be a scope for more transmission of rate, and hence the wait and watch approach has been adopted by Reserve Bank of India?
I would say that, much of it will depend upon, see, the point is that effective from now, even the CRR relaxation, which was announced in the previous policy, they have got kicked in. So I would say that as far as the liquidity is concerned, liquidity to the extent of about 2.5 trillion will get released with the implementation of the new CRR norms. So I would say that based upon that, and also depending upon how the demand for credit will really unfold, I think that is something which is going to define how the interest rate movement will take place. But nevertheless, I would also like to highlight that one, of course, the governor has also articulated that they are going to look into they are going to put in place a structure for supporting the acquisition financing by the corporates. So I expect that it will probably give a boost to the credit demand from the corporate side also. So I think we are quite hopeful that in this busy season, as it is normally, the credit offtake improves. But with the relaxations and also enabling provisions which are being created by RBI for addressing what the corporate needs, I think it will go a long way in terms of supporting the credit growth. And depending upon the credit growth which will be seen, and also the CRR which will actually provide more liquidity to the tune of about 2.5 trillion. So these are going to be the deciding factors, and much of it will depend upon how the tariff-related challenges will unfold in the days to come. How will it really show up on the real economy? And that is the reason. That is very clearly articulated in the governor's speech also. So they would like to wait and watch. So that's why the stance has been kept neutral.
Right, Mr. Khara, one last question to you. Basel III capital adequacy norms now will be applicable from 2027. Now, banks have been in preparation for the same quite a while now. How do you think the banking system will take this?
I think it is anyway, eventually we are moving towards the Basel III norms. So I think when it comes to the bank's ability to raise foreign capital, that will actually enhance. So, and since they were already in the readiness for implementation of the Basel III norms, and now this additional time which has been granted, this will actually further strengthen the bank's capital base. So this will actually augur very well for the banking system.